Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, we had NFP yesterday. It was a silent NFP because of the Good Friday holiday, but still we saw dollar going for a recovery after the NFP. As you can see on the screen, dollar firms as US job report backs Fed hike in May. US economy creates 236,000 new jobs, dollar rises. US rate futures price in 25 basis point hike in May. Dollar strengthened on Friday after data showed an increase in jobs in the world's largest economy last month, suggesting that the Federal Reserve may have to raise interest rate hikes next month. US Treasury yields and the dollar climbed an abbreviated session on Friday after employment data for March indicated that the labor market remained tight last month, raising the odds that the Federal Reserve has at least one more rate hike in store. Non-farm payrolls increased by 237,000 jobs last month, the Labor Department said, very close to the 239,000 expected by the economists. Okay. Wall Street exchanges were closed until Monday due to the Good Friday holiday. European markets, yes, are closed on both Friday and Monday because of the Easter holidays. So, my dear friends, we may see a gap down opening on the chart of gold, but more or less the market will remain silent. I'm talking about the other pairs. So, this is the overall scenario after NFP. To be honest, personally, I'm tired of all these rate hikes. I have switched my trading style to intraday trading completely. I am not carry forwarding my positions to 1 day, 2 days. I am totally done with rate hikes and all these uncertainty of the market. If we look at the chart of US government bonds, then we can see that government bonds have recovered, showed good amount of recovery yesterday. And we cannot also deny the fact that we have a descending triangle pattern here. Descending triangle pattern is a bearish pattern. To go for a complete trend reversal, US government bonds will have to cross 3.500%. It will have to cross this level, then only we will get the confirmation that there is a good recovery on the chart of US government bonds, because next time if government bonds comes down to the support after forming a lower high, there may be a possibility of going for a complete breakdown. And if you look at the chart of DXY, then we can see that DXY is going for a recovery, closed at 102.09. As discussed last time, the charts speak before the news, and we got a glimpse of it. By Monday, there is a possibility that DXY may show some recovery, because already we have discussed about the wedge pattern on the chart of DXY, and wedge pattern is a trend reversal pattern. And as of now, 101.90 is the support for the market again. So this is the chart of DXY. We will get a better picture on Monday. Market opening will be very important for DXY as well as gold. Okay, and this is the chart of gold. Before I proceed further, I would like to give a big shout out to Chart Prime, who have sponsored today's video. Those who want to generate their own buy and sell signals, please watch the video carefully, because Chart Prime is one of the best custom indicator in the trading world right now. With the tools available in Chart Prime, you can not only generate buy and sell signals, but also you can use these tools as additional confirmation in your analysis and take your trading to the next level. They also have a community on Discord where they post regular trading ideas. And my dear friends, probably you all have seen me talking about Chart Prime for the last couple of months. And my dear friends, trust me, their service is really awesome. My dear friends, as we all know it very well, that no tool, no trader, no company is 100% accurate, but with proper risk management and additional help from a tool like Chart Prime, you can definitely expect to earn some good money and change your trading completely. And to know about the functioning of these tools, you can simply go to their website chartprime.com, and under tutorial section you will find many videos. In case you are still confused about the functioning of the video indicators, you can simply go to the Discord channel. You'll see that they conduct 2 weekly classes. In one class they teach about the functioning of the indicators, and in second class they talk about the strategies that you can use with the help of these indicators. So this is the 4-hour chart of gold in front of us, and as you can see that there are many signals generated by their tool market oracle. Possible reversal down means there's a chance, there's a possibility that the market will be going down, so you should go for a sell. Possible reversal up means the tool is saying that you should be looking for buy position. Possible reversal down means you should be looking for sell position. It may look like a magic, but my dear friends, again I'm repeating, no tool is 100% accurate, so proper risk management is extremely important. And prime oscillator is another powerful tool where you will see divergences. Those who know how divergences work, this will be very useful. I'm a fan of divergence. Okay, so this oscillator is a very powerful tool. Okay, and in addition to that, there are some other tools also, indicators like pattern detector, smart money concept. Okay, you can check them out later on. And the best part is the pricing. Okay, we can see that the pricing is very competitive in comparison to the other players. Okay, you can see that they only charge $57 per month, which is quite less in comparison to the other service providers in this category. Okay, at first you can simply try the tool for 1 month, and I'm sure you'll love it. Use the link in the description to get 30% discount at the checkout. The discount is available on monthly and quarterly plans only. If you're looking for discount on annual plan, please let me know. I'll get it for you from the Chart Prime. You can also scan the QR code on the screen for faster registration. Please check them out. My dear friends, I am in the 1-hour chart of gold right now. As I just said, that there is a possibility of a gap down opening because of the rise or the recovery on the chart of DXY. So my dear friends, please be careful right after the market opening. Usually Monday markets or the market opening are quite silent, but this market opening will be too much exciting because of the NFP yesterday and market was closed. So my dear friends, please be careful and let the market settle down if market shows extreme volatility after the market opening. If you have any ongoing position, then you can trade according to the market opening. But if you're looking for fresh opportunity in the market, please let the market settle down, then only enter in the market. As we can see that right now market or gold is trading inside a downward channel here. Okay, and if market shows a gap down opening, then the first support will be around 1998. If market shows a gap down opening around 2000 level, 2001, 2002, then there is a possibility that 1998 may act as the next support for the market. Again, volatility will play a big role here. If market does not show crazy volatility, 1990 will be there to provide support to the market. You can expect the market to get some support to show at least some kind of a bounce from 1998. But in case market shows extreme gap down, market shows extreme volatility, then obviously 1998 will not work. In that case, your next hope will be 1991 to 1987. The green box here is the next support on the chart of gold. In case of a gap down or extreme volatility, this support is the only level where we can expect the market to get some show some buying. And the third support on the chart of gold is around 1981. These are the 3 levels on the chart of gold. So if market does not show extreme volatility, then 1998 will be acting as the first support for the market. If market shows good volatility, extreme gap down, then 1991, 1987 is the support, and Then we have 1981. So volatility of the market will play a big role because of the strength on dollar. There is a possibility that gold will show a gap down opening. Okay, so gap down opening may be quite dangerous. Sometimes we get to see a immediate recovery after a gap down opening. That's why I said that if you're looking for fresh opportunity in the market, then let the market settle down, then only take a decision. And those who have any ongoing position in the market right now, I'll tell that you can trade according to market decision. If you already have a sell position above 2010 level, then you need to be careful, because after gap down opening, okay, market may show some recovery as well. The reason is that market does not like gaps. If you have traded on stocks before, then you must be knowing that stock market is full of gap ups and gap downs, and market does not like gaps. Gap filling is also very much common in the market. And under normal circumstances, if market remains normal, the volatility of the market remains normal, then we have a resistance around 2016 because of the channel here as well as Fibonacci. So around 2016, 2017, if market reverses, we can look for a sell position for day trading purpose. It can be a sell position of 40 pips. As I just said at the beginning of the video, that because of the rate hike confusion, unpredictable nature of the market for last couple of days, I'm done with swing trading. I am solely into scalping and day trading only. So as a result, I'll also be targeting 40-50 pips only on each and every trade. Today I will not be suggesting or I will not be predicting any trend reversal or anything like that. I think that we should wait for the market to open so that we can get a clear picture and we get a clear understanding of the next direction of the market. It is too early to predict the market for the next couple of days and weeks. I think we should wait for the market to settle down. Okay, because see, I'm also a trader. I know the limitations of a chart. Okay. And if I have missed anything, write down in the comment section. I would love to learn from you. After all, we are all students of the market, and market is the best teacher. And this is my lesson, my dear friends. I can be wrong as well. So please follow proper risk management. No trader is 100% accurate. As I said, okay, and I also confess sometimes that this trade has hit SL, that trade has hit at a SL. SL getting hit is not a big issue. It's quite common in the market, but your risk should be under your control. Okay, your loss should be under your control. That is the most important thing. Anyways, that's all from my side. Bye bye. Take care. Enjoy your weekend.